Hi everybody, this is Gary Dean and this is our nightly video report for Monday, May 9th, 2016. I'm actually getting this out a little bit early. I'm kind of bored. So anyway, the markets pretty much took the day off today. We saw some tries by the bulls to push it higher, and the Dow has been weak all day, and that's kind of been what's lagging, keeping everything under a lid. But right now, I believe that we could actually still head higher. It's just a matter of, are they going to come and take a break first before heading up there? But the way that it appears as far as the pattern is we should still have some more room on the upside. And once that completes, the larger move will be back to the downside again. So if we look at just our regular internals here, you can see we haven't really burned off any of the extreme, overextended levels that we saw on the advanced decline. And if we go down and take a look at the VIX, I was expecting this move to come down off of that. So there's still plenty of room to go before this gap is made up. So that's another reason why I believe that the larger move will still be to the downside, but once the bounce finishes. So here's the put call ratio, and you can see from Friday we actually you can see that a lot of puts are starting to get bought. So the complacency that was down here when everybody was just buying calls has worn off, and now we have some people that are scared. So that gives you kind of an idea that they still may be able to kind of push things a little bit higher, because we got a lot of fear in the market right there over the last few days. Now, with the bullish percent, same thing. We're still stuck at these elevated levels. So the push up will make sense, but I don't believe we're going to take the highs out. And once that finishes, we're going to head back down again. And finally, the fractal pattern that I've been showing you. And again, I'm not sure if this plays out as it has in the past, but right now the way that it's worked is after we made the top, we came down, made a bounce back up, and once that got rejected, we headed back down. You can see down, up, never made a new high, and then from there we moved down. So I believe we're in this phase right here. So maybe they have to come down a little bit further, or maybe that's it, and then they come back up and test these highs before heading down. Either way, it's we're going to let the market do what it's going to do. But I just think that there's still the larger move is going to be to the downside once this counter trend bounce ends. So here you can see the bulls. What they need to do is get it through this say the 2064. If they do that, I don't think 2066 is going to stop it. I think they're going to go through that, and I'd probably be eyeing down to 2075. But I think before any, say, major move to the downside, or the bigger move that I'm thinking is going to be taking place happens, is going to be until they close this gap right here, and that's looking all the way up at 2080. So I think that even though the larger move I'm believing is down, you want to be careful shorting, because you don't want to be shorting if we're heading all the way up to this level. Now on the downside, you really want to see the bulls try to defend this 2048 level all the way up to this say 2051. So this area here is going to be important, because if the bulls don't defend that, then this is going to come into question again, whether this will hold. And if it doesn't, then we're probably looking at a move that's coming all the way back down to the 2033 or lower. So there's a lot at stake right now. We're still in this little kind of no man's land, and it would make more sense if they went higher first, but they may come back and do some backing and filling before heading higher. And as long as the bulls can really hold this support right here, I'm still anticipating that the next move is going to be up. If they lose that, then this is going to be your panic line, because if they don't defend this level here, then we could see that quick drop down to the 2033 or 2020 area. So that's pretty much it on that. You can see we're getting pretty overbought now on the 15-minute chart. As we ran into some resistance, we have some bearish divergences in place. Well, not really, because this never really took out these highs. Oops, sorry. That never took out these highs right here. So we don't really have the the bearish divergences in place. But if we do pop higher, we may get them. So again, I think it's just you want to keep a very open mind, because they could head up or they could head down, and it will make sense. I think if they head down and they find a low and then come up, then we're going to start getting some lines in the sand for the bears and the bulls, where if they break that, we're going to know the trend has changed. So if we look at a 60-minute chart, bulls still have plenty of gas in the tank. If they do want to take it higher, you can see they push through this falling wedge here, so that would give us an idea that they're coming up to the 2083, 2074 level, but they may come back down and try to back test some first. And on the daily chart, you can see that we're still very overbought, and there's plenty of room to go until we're oversold. So on the daily chart, we're looking the bigger move down. 60-minute chart, we're looking for the short-term chart move to be higher on the upside, and then the 15-minute chart is giving us an idea that we may get some kind of pullback before the move up. So let's see what plays out tomorrow. Keep an open mind, and I'll talk to you guys in the morning.